And welcome. This is Mary Ellen McGonigal with your Friday afternoon MEM Edge show. Of course, the show where we bring you where the action is in the broader markets. Lots that I want to share with you relative to what is taking place beneath the surface of these markets. And there certainly were some headline news last week. Most impactful was that third quarter GDP number that came in really quite strong. It was a revision of the prior GDP number, and it came in at 5.3%. However, beneath the surface there is the fact that we are seeing a slowing of the economy going into Q4, and that slowing of the economy was also announced with the release of the Federal Reserve's beige book. And if you really want to dig in, I would say take a look at that and you'll get really some nice insights into what's shaping up here in the economy. Also, we did have Fed Chair Powell speak, as well as several federal governors, reserve governors, and each of them cited the fact that it is too early to talk of a rate decline despite the reduced inflation. So I would say those were the primary items out last week. Next week, the most impactful will be employment data for the month of November. So stay tuned for that. From here, let's go ahead and take a look at those broader markets and see where did we close for the week. And here we are with a daily price chart of the S&P 500. And as you can see, we do still have that uptrend very firmly in place here with this broader market indice up above this 10-day simple moving average, your RSI and your MACD up here in positive territory. Of note is the fact that this RSI remains and got back up into an overbought position. So you do want to keep an eye on that. I certainly will be sharing insights with my MEM Edge subscribers. If we do see anything by way of a pullback, we need only go back to this June and late July, mid-July period as examples. And I will share with you a chart view of the broader markets with that correction, in this case, highlighted as far as the characteristics that you would need to see to feel or certainly have a sense that a pullback and even more is ahead of us. So keeping an eye on that. Otherwise, the S&P 500 remains in a nice confirmed uptrend. From here, we want to take a look at the broader markets beyond. The S&P 500 was up about 0.8%, but we do have some underlying sectors that experienced an outperformance beyond that, actually about half of those underlying sectors. So let's take a look at this 2-month daily price chart view of the 11 sectors. I've added that RSI indicator and sorted this by relative strength. And up here at the forefront are some of those outperformers. Here we are with financials, XLF, super strong rally toward the end of the week. As we progress, I will share with you one area that is newer to this gain in the financials. A lot of these earlier gains were related to insurance stocks and other financial asset management type firms. But more recently, we do have a new area that has joined the uptrend taking place elsewhere. Also up for the week above the broader markets are basic materials. This is XLB up almost 3%. And up next, I will share with you a chart of gold. That was one of several areas underlying steel. A number of these basic material names are on the move higher amid a lower dollar. And then also we have growth shaping up overseas and elsewhere that I will share with you as we move through. Industrials up over 2%, a big part of that coming today with a 1.6% rally. A lot of this having to do with a continued move into the defense names, but today it was all about transports and those names on the move higher. Moving through, we can see XLRE. This is the REIT group, and it was up 4.5% 1% this week. Again, a good large chunk of that coming today. And as we move through, I will share with you a couple of REIT names that are worth a close look. These names do fare well in an interest rate declining environment, such as the one that we're in now. But the names I'm going to share with you are stocks or companies that have other reasons in this real estate area for moving higher. Let's move through here. We'll take a look at technology, and it was an underperformer. Take a look at this flat move. It was up 0.6%. A lot of that having to do with Microsoft and Apple underperforming this week as well. So we can see this sideways price action, but it is a welcome relief given the fact that we've been in an overbought position. Tech has been a clear-cut outperformer here, certainly last month. And this reprieve is, again, welcome. We will keep an eye, however, with tech on this black line poised to turn down through the red. And in historical precedents here, you can see that it can point possibly to further downside. So I'm keeping a very close eye on that. We'll take a look at some of the sub-industry groups in tech as well. So moving through some of these other areas, you do want to be aware of those areas that are continuing to exhibit weakness. Energy would be one of them. XLE just chopping along here. Not a whole lot to talk about. The price of oil did pull back last week. And one other area that I did want to share with you that entered into an uptrend last week, it did underperform until the last 2 days. We did see a nice rally, and that is healthcare, up only about 0.5%. However, it was able to regain that uptrend with positive momentum on that RSI and that MACD. So from here, I do want to take us down a little further, drill down beyond these broader sectors. It's really important that you get not only that sector right relative to your stock selection, but also the industry group. About 33% of your price appreciation or depreciation is going to be directly related to the industry group. Add in that sector, and about 49% of your price movement is going to be directly related to that group that you are a part of. And this is all about a study that Bill O'Neill executed over many, many years. So here we are with these sub-industry groupings, again, a 2-month daily price chart view. And up here at the forefront, take a look. This is software. This is an area that I've been talking about for quite some time. We can see this mid-month gap up into a nice uptrend. As this group broke out of a base, we're seeing a number of companies come out with superior earnings and raising their growth guidance, which is very good news. I'm going to share with you a couple of stocks this week that announced, and we'll take a look at the dynamics following their strong earnings. But at the end of the day, this is a leadership group. However, you will want to stay on top of these momentum indicators and make sure that you're not too late to the party. Also up here at the forefront, home building stocks, big move today, up 3%. Again, all about that decline in interest rates, and also taking a look at some of the underlying companies in here that are coming out with nice, strong earnings. And certainly subscribers to my MEM Edge report will be familiar with a couple of the names that we've been adding over this past month. So moving through, I did mention to you that gold stocks were among those material names that are on the move. And here we are with GLD. I'm going to pull up a weekly chart and share with you just how high gold is after this week's move relative to historical precedent. Net, we are seeing this really strong uptrend with the momentum still looking as if it could see a little more by way of upside. Now, as we move through, I do want to share that newer group to the financial space, and that is KRE, the Regional Banking ETF, up 5% on the day. This is another area that subscribers to my report have gotten into. I've added a couple of names 2 weeks ago to this group, and we can see that today in particular, that nice trend higher, nice high volume, and we have nice upward trending momentum. A lot of that having to do with investors feeling that the debt issues and a lot of the negative activity surrounding these bank stocks that collapsed, a lot of them here in March with that crisis, that the crises and other issues are behind them. And then, of course, with rates coming in, there is anticipation of increased lending activity, certainly with that GDP number and the concept that the economy is on pretty firm footing. So as we move through, another area that really came on strong this week, and that is small cap stocks. And take a look, up 3% today to give this particular area a 3.2% gain for the week. Of note is the fact that within the Russell 2000, well over 20% of the stocks in here are bank names. So you do need to keep that in mind. But there are areas in these small cap names that are coming to the forefront. One other area I do want to share with you is this view of that yield on the 10-year Treasury. And we can see that it has been continuing to decline quite nicely, ending here at 4.2 after getting up as high as 5% at the end of October. So this is very good news for the broader markets, although we are due a reprieve given the superior outperformance in the markets for the month of November. The Nasdaq was up 9%, S&P up 9% as well for the month of November. So certainly, again, due a period of pause perhaps here as we move into the beginning period of December. So one other area I want to share with you, and I keep saying that, but here we are with semiconductor stocks and SOXX. They were flat for the week, but of note is this move in the month of December. The group was up 16%. So any kind of consolidation phase or period would certainly be anticipated and even welcome. So if we do see any kind of further pullback, you will want to be on the lookout to make sure that this RSI remains up here above 50 so that any holdings you have in this group can be viewed as being in a constructive area. And then what we can take a look at from here is a view of the underlying components of the Dow Jones Industrial Average. The group was up 2.4%, and within that, the index did hit a new high. Let's see if I can go back to here and pull up the chart for the Dow Jones, share with you the view here. Really strong rally over the last 2 days and a move to that new high. We'll go ahead and pull up that weekly. Now, of note is the fact the group did not pull back as much as the markets, but this very healthy advance is all about a broadening out that is taking shape in the broader markets, where we are seeing a move beyond those mega cap magnificent 7 names. And here we are with a view of the equal weighted S&P 500. And I've gone ahead and overlaid the ETF VUG, which is Vanguard's growth ETF. The primary components here are those magnificent 7 names. And what I wanted to point out to you is this sharp advance in the equal weighted S&P 500 this week relative to a flat performance in those mega cap names. And again, not entirely unexpected. Those big cap names were the first to advance, and they are certainly at this point trending sideways and consolidating their big moves from here. Let's go ahead and take a look at those underlying components in the Dow Jones Industrial Average. And I wanted to highlight for you some of the names that are newer to their uptrends, because we can see Boeing up and out, and some of these other names that have already reported earnings. Goldman Sachs is looking very constructive among those financials. I talked about those bigger bank names already being in new uptrends, but let's take a look at some stocks that are potentially just entering new uptrends. And here we are. This is Caterpillar, CAPT. This is all about earnings. They have been able to recover so that today the stock has closed back above that 50-day simple moving average. RSI and MACD both in positive territory. A lot of this having to do with nice growth overseas, emerging markets, that softening dollar, and other outlooks that are helping Caterpillar potentially reverse its downtrend. Another stock as we move through is a name that's had trouble here, and it wouldn't be my first choice, but Johnson & Johnson, J&J, gap up today. They too are working on a weight loss drug. You can see the stock closed above this 200-day simple moving average with constructive momentum. And one other name that I did want to share with you that had been in an uptrend, but is now renewing that uptrend, and that is Nike. And it is now back above this 200-day simple moving average, positive RSI and positive MACD. So a couple of names there in the Dow that are newer to their uptrends, with the Dow hitting a new high in price. One other area that has been on fire of late are the ARC funds, and they are primarily ARC Innovative, Web, Robotics, FinTech, and so on. But if you have not been following them closely, you will want to at least be aware of their move and back into very confirmed uptrend. Of note is the fact that you can very easily go into look at their underlying holdings, Yahoo Finance, other sites, and you will see commonality among these different ETFs where they have the same names. And I'll share with you a couple of the stocks that are in at least half of these underlying ETFs here. First up is Tesla, of course, and many of you have heard Cathie Wood speak about this company for some time. It's not really faring well this week. It is down a bit, but one name that is and is top of a number of these names is Coinbase Global. We're seeing a lot of vibrancy in the cryptocurrency space, and Coinbase is best poised or positioned to benefit from that. So a very confirmed uptrend there. Another name among many of these ARC ETFs is Block. SQ is the ticker symbol. Here's a gap up after their earnings. Nice continuation rally. Now in bullish territory above that 200-day, a bit overbought to say the least. Other names and areas that are being favored by the ARC ETFs, Shopify here, nice downtrend reversal, gap up into an uptrend. So of note there, those innovative companies are back in favor. Now let's take a look at some of these REIT stocks. I talked about that group being the top performer this week, and within that, one subgrouping that really outperformed, and that is names such as Crown Castle. And this particular company leases towers to other mobile device providers. And we can see here the stock has had this gap up into a very nice uptrend, super high volume here. The company also has a majority stake now from Ellington, which is a company that goes in if they feel that the company is not working to their potential, they try and override that. So that was viewed as good news as well. However, there are other stocks within this group that are faring well, and this is American Tower, AMT, also a tower leasing company, gap up into a nice uptrend. And last up is SBAC. This is a little bit later to the party, but same dynamic with that gap up into a nice uptrend. From here, if you are interested, you can take a look at a full quote, and you will be provided with their yields. Some of these REIT stocks do come in quite high. Crown Castle is 5.3%, for instance. And guys, I'm going to leave it there. Hope you have a fantastic weekend. If you like what you've seen, go ahead and hit that like button. And I'll look for you again here next Friday afternoon.